So first, again, we'll go with in terms of why it's important, right? Because this a lot of people move for many different reasons. People are moving for jobs, for businesses, for family reasons, and then a lot of people move to states where there are no state taxes or low state taxes than versus Canada or a province they're coming from. So we want to make sure that whatever the purpose is, that you are paying the minimum tax possible, right? We don't want the maximum tax, especially when you're moving to US for work or business purposes. We want the minimum tax, and for that you have to understand how things will work. So this one-stop tax guide for Canadians moving to US is a one-stop shop where we talk about how things will be on the Canadian side when you move, how things will be on the US side when you move. That includes reporting forms, and then what can you do to simplify your reporting, right? So this is the summary of what we were discussing today. And then there's a lot more. I'll try to cover as much as possible in this video, but there's a lot more. So if I don't cover any topic that is relevant to you, shoot us an email, info@keepcp.com, and we can definitely help you. All right, so let's get started. So first of all, what happens when you actually move to US from Canada? So first thing that we want to look at is your Canadian tax residency. Are you still a Canadian tax resident? That's number one. Number two is that how the Canadian departure tax works. So if you are moving from Canada to United States, of course, CRA will tax you on certain assets that you own in Canada. So that means there will be a deemed disposition. We'll look into what deemed disposition really means. And then again, what happens to your Canadian assets, which includes your retirement accounts, your investments, your real estate, your shares. There's a lot more to it. And then we'll talk about how can you understand tax and 5 simple steps for Canadians. I want to touch on that topic first, and then we'll get into the illustration, which is number 6. And then we do have a checklist that we're putting out on our website that you can download. It's a text checklist which lists down a lot of the items that you need to go through to understand how things will work for you. All right, so let's stop. Let's go to the 5 simple steps first, and then I'll get into other items. So 5 simple steps for Canadians moving to tax in 5 simple steps. So what do you really need to do, right? So step number 1. Step number 1 is to understand Canadian tax consequences on assets, investment, real estate, when you leave Canada. This is very important because this is how it starts. This is how it starts on the Canadian side, and this is how it starts on the US side. So make sure that you understand how the CRA will be taxing you on certain assets. That's step number 1. Next thing once you do leave, how the US is going to tax you. That means how the IRS looks at your assets. And then what are the tax implications when you have those assets while you're living in the US, right? That's the second step. So understand, number 1, understand the Canadian side, understand the US side of the assets. So once you understand both sides, then you can determine, okay, I need to get rid of these Canadian assets first before I move. So whatever I'm going to do here on the Canadian side will impact the US side. So this is all in the part of making it simplified and manageable, right? That's step number 2. Step number 3 is once you do understand what you need to do, then again, find out about the reporting requirements in terms of what you need to file on the Canadian side, what forms you need to file on the Canadian side, and when you need to file those forms. Important. The due dates are different on both sides. There is an element of extension on the US side too, which we do need to make sure that we take advantage of. And then so, we're coming from the Canadian system. We understand, April 30th is the T1 deadline. And then, of course, we have the self-employment deadline for June 15. But, on the US side, the dates are different. And then we do have extension available. That extension is to extend the filing, but not the payment. This is just to be clear on that side. The extension is to file, not for the payment, for the tax payment. And number 4 step will be to find out what reporting requirements are of what forms are there on the US side. So beside the 1040, what else do you need to file? FBAR, 8938, if you have PFIX, or do you have capital gains that needs to be reported. So these are all the things that you need to go through. Of course, tax treaty elections, that's number one, right? Because we want to make sure that we do take advantage of the Canadian-US tax treaty. The benefits that come with the tax treaty, make sure we do take them. And a lot of accountants do miss them. I've seen many tax returns where US accountant and the Canadian accountants will miss those tax treaty elections. So reporting is the key here. And first year reporting is the most complex, right? So make sure we understand reporting forms on the Canadian side and reporting forms on the US side. And then again, finding out the differences between the timings, how the system works, what they're trying to tax you on, what reporting is required, so you can plan. Planning is the key here. So I've worked with a lot of Canadians who move and then don't do any planning. And next thing you know, they find out things next year. And then now we're trying to play catch up. We're trying to figure out how we can close certain accounts, what we can close investments, how the tax is going to look like on the US side, how the tax is going to look like on the Canadian side. Are we still Canadian resident? Are we still tied to Canada? If we're still tied to Canada, do we have to report the US income? There's so many questions running through your head. And then is Canada trying to tax me on the US income? Are they going to be a double taxation, right? See, these are things that, in some cases, yes, in some cases, no. There might be additional taxation because Canadian tax rate is higher than the US. So you get into all these scenarios, without even knowing it, right? We are excited to move, and of course, when we are moving, and it doesn't matter where we go, but these are important things that need to be planned out, especially when it comes to taxes. And then so I get a lot of stressed out Canadians coming to us and then saying, hey, Mohammed, this is what happened. This is what happened. I didn't know this. I didn't know that, right? It's okay. We can work with things. We can plan things. And now we do have reporting requirements that need to be met. So these are things that need to be planned ahead. And then so it is very important to understand the Canadian side, step number one, on all the investments, retirement accounts, real estate that you own, how the CRA is going to tax you. Number two will be to look at the US side, how the IRS is going to tax you, what reporting requirements are there, understand what filing requirements will be on the Canadian side. And number four will be to understand the US filing requirements, right? And then number five will be to understand the system, the due dates, the certain things, how the CRA looks at things, and then how the US side looks at things. So these are very important. 5 steps, 5 simple steps for Canadians who are moving to US, how to file your taxes, how to understand. Now let's get into the detail of this video. So we touched upon how this guide will help you in terms of simplify things. We touched upon what are steps that need to be taken. And now I'm just going to focus on the Canadian side.